Good morning, Frank Watkins. I just thought I'd go through a trading concept that I try to stick with as much as possible. I'm going to assume that your average investment, let's say into any one stock, is say $10,000, just to have a number. What I'm looking for, as you probably are aware, is a breakout. Now, we're looking at CXO, and if we look at resistance from 8th of July 20, it goes through to November 20. So 4 or 5 months of resistance. At that point, I think you can go hard with your bigger parcel, i.e. the $10,000 parcel. You get the breakout and away the thing goes. Now, whether you take profits on that is irrelevant. The next entry is a break of that big 10-cent level, 31st of December. Now, to my mind, this is the opportunity for your second entry. Not a lot of resistance. I'd prefer to see more resistance in this second entry, but it's solid because on balance volume has remained rock solid and volume itself has dropped off. So if your first entry was a $10,000 parcel back here, to my mind, your next entry on this should be a $5,000 trade. Whether you're in on the first trade or not, with only that much resistance, I would be trading a smaller parcel. You may change your mind on that a bit simply because the break of 10 cents usually is a pretty big move, and we did see it here. But anyway, $10,000 back here, $5,000 back here. Again, you may have taken profits or done something in here, but ignoring that, this is your third breakout entry. And because you've already done so much, you need to back off again with your parcel size. So I'd be suggesting $2,500. So go hard down here with 10,000, add 5,000, add 2,500. Where you exit, I'm not going to go into that because, you know, with the advantage of hindsight, you could come up with any argument. But I would think that by the time you saw this candle here on the 10th of Feb, you probably would be out on that one, but it's only probable. So let's see what's happened since. We've had another opportunity. This entry or this resistance was from 15th of Feb through to August. So that's a good 6 months. That again, to me, would be a fresh start with a $10,000 trade. The longer the resistance, the bigger the trade size. If we go across a bit further, again, I can't tell when you'd have taken profits on that, if you had taken profits, if you bought the retracement to the break, so on and so forth. But there's a bit of a difference if I were to draw resistance and a potential breakout at that level, and again potentially at that level. The difference with these two entries would be that on balance volume has been fading. It hasn't been rock solid or rising. So every likelihood I would not have taken that trade on the 14th of Sept or the trade either on the 13th or 14th of October. In fact, I know I didn't take the 13th or 14th of October. And also this to me, if we look at the 11th of August and the 14th of September, it's simply two data points. It's not enough resistance. We like to see this sort of thing here just before the breakout, and also several touches of resistance. So even the 16th of September compared to 13th of October is not enough resistance for me. Anyway, the main principle is go hard on your first entry with a lot of resistance, then add a half-size parcel on the next break, and again a half again on the third break. I'll leave you with that thought. Cheers.